Hey, it's Mack with PriceActionTradingSystem.com. It is Thursday, it's January 28th. This will probably be our last chart lesson for the week. I probably won't do one tomorrow. I'll take my usual Friday off. Um, the weather's supposed to be really nice here tomorrow. Pretty nice today, and I've been inside all day, so I'm looking forward to getting out of here a little early tomorrow, start my weekend a little early. But anyway, a couple of things before we get started on today's chart lesson. I'm getting a lot of questions about failed second entries and so forth. People struggle anytime we get somebody new here. They always struggle with second entries because they think there's something magical that they are going to be difficult to figure out. But once you understand what we're doing, they're really pretty simple. So between trying to explain those and then somebody really won't quite understand second entries yet, and then they're trying to jump on to failed second entries. Um, and they really don't understand the failed second entry. So what I would say to most people is concentrate on second entries for now. Once you get a solid understanding of a second entry, I won't have to explain what a failed second entry is to you. It will make perfectly good sense. So don't try to get too far ahead too quickly. Failed second entries they are very powerful. They're traps, and so they're beautiful setups, and they're very powerful. But if you don't understand what's going on, you're going to have a lot of trouble with them. And I had a couple of conversations today. I had the conversations today, but it was about yesterday's price action, and they were asking about a failed second entry long, and that turns into a failed second entry short. But I don't see that on my chart where they're talking about. They're saying 1143. So 1143 is right in here in this little congestion area on my chart. Let me make it a little bigger. So if that's where they're really talking about, I don't know what they're seeing. They're seeing something. Shoot, my chart jumped all the way back over here. They're seeing something I'm not seeing. So I'm guessing they're talking about right here, which you could say that's a failed second entry long. It's really a second entry short as well with a big bearish bar. But if you go short there, yeah, it bounces back, but that's not a failure. We reached the scalper's profit easily, more than the scalper's profit. And when it comes back, whenever you enter, your stop goes above your signal bar, so your stop's up here, so you wouldn't have got stopped out even if you'd hung on to it. So, you know, I'm assuming that's what they're talking about because that's the 1143, unless they're maybe talking about something in here. Maybe they're talking, well, even that would have worked. That's good for a scalp. So maybe they entered right here at 12:57. That's 1 o'clock, but that's into the news. So I'm really at a loss of what they're looking at. Um, Let me just show you what I see right here and explain to you why you wouldn't. There's no failure. I mean, you really got a trend line that's working up right through here. A price action is a little bit different today on this chart because this is historical data. I had more of a two-legged swing there, so it was real clear it was a failed second entry on my chart yesterday. But if you notice, there's a real tight channel working up here, and you can see that. And we overshot it here. We got a break here, 2 legs up to a new high. So now we're looking for a reversal. So, and notice how prices shoot right through that EMA right there. That's your first signal that, hey, this thing's probably going to reverse. We're probably going the other way. And then you get what was a failed second entry long here on my chart, and it turns down and you get a big bearish bar. It goes short right there. Yeah, it doesn't keep going down. It ends up bouncing, but it doesn't matter. It would have worked. And that's why we scalp out on 4 ticks. And I mean, if you're not scalping out and you're just trying to get into trades, and you don't want to be trying to trade traps, because that's what they do a lot of times. They just rock it real quick in the opposite direction, and then they might start going up again. So you got to take what it gives you here, and you can see that if you entered 1 tick below that all the way to the end, that's almost 4 points. And you only have to get 4 ticks out of that. So, you could actually get a little bit out of a runner on that. So there's no failure there. I'm not. At first, I thought they meant the failure going long, but there's no long here, so you can only consider going short. So I'm not sure what they're talking about. If they're talking about somewhere else, so that's why it's so important. I always tell people when you send me a question, you got to send me a picture, and you got to point out specifically where you're talking about. But the guy that asked this question, he did say 1143 on my chart, and that's 1143 right there, but there's no failure there, and there was no failure yesterday. I mean, there's a failed second entry long in there yesterday that turned into a short, but he's trying to say the short was a failure, and it's not. So maybe you're misunderstanding what's considered a trap and a failure or whatever, but that's why I'm going back to, concentrate on learning second entries and getting that down. And once you do, then second entries are pretty much straightforward. And it'll make more sense. It'll be easier to understand and easier to, let me back out here so we can see. Oops, that's too far. We just want to back out enough where you can see today's price. And you can say days of trading range. We pretty much spent the entire day in this trading range. It's a nice size trading range, so it's more than 20 plus points. And if you go from high to low, it's even more than that. So but you can see here that we had about an even break on this side of the range as we did over here, and that's pretty. You won't always see that, but generally, if you get a failed break out one side and you get one out there, they're typically even. And once we started kind of getting hung up here, you can see that this is just a midline in the middle. There's from the low to the midline, and then from the midline to the high. And we ended up just getting in a real tight range here towards the end of the day. So it didn't really, there's only a couple of trades out of here, but most of it, this was a really nice trend down, then pretty nice trend up. This just got too congestive right here. You can't enter in that. And you did have one more short, then another move back up. And that's just the way ranges do. Generally, your best trades are going to be off the highs and lows of the range. And there's actually very tempting trade down there. You can see that short term working down right there. And you get a break here to move to a new low, and it reverses. And so it's tempting to go long, but when we back out, you'll see there's not a very good setup there. So no reason to try to go long. But anyway, make sure that you understand the second entries. And I went over that in a little more detail, just basics of second entries in yesterday's video. So if you haven't seen that yet, go back and watch it. But concentrate on those second entries more than anything. And the other thing somebody asked me today was, well, you don't always get a second entry. When do you take first entries? Well, it's hard to say when you take them because it depends on the big picture. But generally, you can take second entries on a move like this when you don't get any second entries. You only get first entries because it's a real tight channel, and it's a real strong trend. So there's not a lot of second entries. And so you got to take what it'll give you. The same thing coming down here. You don't get a chance for a lot of second entries. So, on a real strong trend, on a real tight, you either got to skip them or you got to take the second entry. Or the first entry. So just keep that in mind. But let's back out a little more, talk about the trades, and wrap it up for today. Short right here. And then notice this is a new low, so it's a pullback first entry, pullback second entry, and then prices don't make it down here, it reverses. Well, that's kind of a reversal pattern. There's a little bit of overlap here, so this one's really a green one, but it's still something you want to consider. And it's a setup that I like to take. And you can see if you take that trade, by taking a little more risk, look at the reward you get out of it. And really, the better entry is right here. I apologize for not already having these marked on my chart, but I thought I did. But the real trade. And still you get a runner off of that trade. So even if you don't take the aggressive one, you catch this one, you get a runner. There's a first entry here, but we never get a tick back, and we're really close to this high and this high. So I didn't like entering these, but this is right off the trend line, and you really could treat this like it really is a failed second entry long, because this is a new low. It's a little lower than that low right there. So first entry, second entry. So, you can take that one too, and I'll even mark it blue. But the better place to enter and be in this trade was down here. It's a lot less risky. This one is way away from the EMA, but it is right off the trend line, and that's a real strong trend moving up, and a real tight channel. So that's when it's okay to take a first entry. And what you might do is let it break higher here and try getting a limit order a little further back in. You see it backed up a good bit. But when you start to get way away from the EMA like this, it does get riskier. So this one is borderline being green, but there's enough reasons to take that trade, because you don't have a break of the trend line. You aren't up here to the top yet. It's close right here, but you still got room to get out before here, and since you don't have a break, we're probably going to move up to there. And notice we actually go a lot further than that. So, but you got to be careful with those. And that's one of the times when you could consider a first entry. But I get those questions, and people, what you got to remember is we are not pattern traders. We look for patterns, but you got to be able to understand the big picture of what's going on. So notice the new high. That's a failed break above a new high. And really, to be honest, if you look how bearish that bar is, how far away we are from the EMA. If you want to be aggressive, you can take that one as well. I think you're better off to wait, see what you get. And that's why we're just going sideways here. It's tempting to consider this short, but you got, this is kind of a trading range right into the EMA, so I didn't like it. And then we kind of push on through, we pull back. And so now you got a breakout pullback short, and you got a double test of this previous area right here. And that's a really bearish bar. So I like going short there. But then it comes back and gives you another test of it. And when you get that additional test and that big bearish bar, I like that again. And if you're not out yet, I like adding on. So, and then you can draw your trend line off all. Notice how you've got something going on there. Draw your trend line there and drag it up and see what happens. If this thing comes right back to there and turns down, then yeah, you got a chance to go short again. This one is really right here. You got a trend line working up through there. So this one is semi borderline, but let me show you something here. You've got all that support across there from earlier. You can see all that support right across there. And so this is a pullback to test that, and notice that high there, and you get like a little double test and another big bearish bar. So, you might consider going short there. If you do, notice it, and the other reason is because it breaks out the top and turns, it goes right down the bottom. If you put a stop right there, a sell stop, there's just enough to get out of that. So this one is really close to being green, but if you saw the whole picture, that's close enough. You don't want to go long here, I don't think. It's also a failed second entry short, but you can't go long on that bar, and by the time you get this one, you're right back up there into that resistance, and you're also right into the EMA. So, and the bigger trend is down, so I don't think you want to go long there. You want to see if you'll get, now that you got the break of this trend line, you want to see if you're going to get back to this possible line and get a setup, and you do. And that bar is too bullish, but notice you made a swing low that's lower than that one. And so pull back, that's like a first entry, pull back second entry. You don't really get a break lower there, but you still tried to go lower twice here, and you broke higher. That's what I really like about this one, but it's off that trend line. And notice how it's set up perfect, then it comes back and tests it, and it breaks higher, and then turns and goes right out the other side. You could have a stop right there under that bar, right there ready to go short. But even with this big bearish one coming right off the trend line and confirming it, I'm okay putting a stop right there, and you could even add on there if you wanted. And you would have caught a runner here, and look at it go. This is one of those where you can ride it all the way down. You'd probably, the way I like to trade, I probably would exit here. Um, but you get another chance to get back in right here. And this is another one of those first entries. Um, it's right off that trend line. I would also be looking for, here's your first leg down, then your correction. So I'd be looking for a measured move. And you can see that's way down here. We're not quite there yet. And that's a big bearish bar. So I like this one. I would definitely say it's kind of close here. If you don't quite have enough room to get out, I would let it break lower and then drop a limit order or a tick or so back to make sure you had enough room to get out. On my chart, there's just enough room there, but your bar can be a little bit different. So, and notice it's still coming down. Now you get the first break of this. This kind of threw me off here. At this point, I was looking for the measured move here as well. But you can see we even went further than that. So I don't really, that's like your measured move right there. So that was another target to shoot for, but we even went lower than that. So really the range took over. And even though this looks very valid, and this could be a midline, this could just be another overshoot. And notice once that happens, we get the break of this one. I don't have it drawn all the way down, but you get the break of this one on the other side and attempt to get a new low, but we can't get back through that support, and it turns back up again. So, but this is a second entry short right here, and this is actually the bar I like. It was actually a second entry short when it went lower right there. But I like this bar because it's the double test. It's the double test of this, what looks like a midline at this point. And I still think that's probably what it is, a midline. I think we just overshot it down here. But what I like doing is waiting on this to break lower and then dropping a limit order back up here where your stop would have gone right here, and you would have gotten filled, and then it drops straight down. And actually there's a failed second entry long right there, but you're right into this line where your previous support was. So I'm a little leery of going short right there. I think you got to skip that one. It would have worked, but with that line being right there, and that's another reason I like this one, because you're thinking this line most likely, but you got to be careful of this one. And so turns out to be a really nice trade. Then look what happens. We push back up. We get a little hesitation at the EMA, but you don't. It's also that previous support acting like his resistance there. But notice we just barely tick back and we push right on through. So there you go. That looks like a reversal pattern. And you pull back, you test it. I don't like this signal bar here, but it is a failed second entry short. It's not really a failure because it gets enough, so I think you got to wait on that one. And then it ticks one tick lower and then turns up. So I like going long right there when it goes above at the same place that you would have gone. Actually, it's one tick higher, but you could wait for it to break higher and drop a limit order back there. But I like just having it one tick above that since it's all in one bar. So really, this is your signal bar here, the big green one. But the way it played, this red one's your signal bar because it went lower and then turned and went out the upper side. And then guess what? It pulls back again, and it's almost a repeat pattern here. Breaks lower, turns and goes up, and you got a big bullish bar here, so you could have just gone long right there and look at it go, and you get another runner on that one. Comes up here to where about the midpoint is, and you start going sideways again. This is too sideways, too much overlap. You don't want to do anything here. Just sit tight and watch. That's what a lot of people are just not patient enough. They're constantly looking for an entry. And they get sucked in and they make a mistake. Actually, because there's all those matching highs across there, I don't have a line there. But there's one there, trust me. This is like a failed break higher, and you got a big bearish bar, and you got a midline in here for this trading range. So you could consider entering right there. The only reason I didn't like it is because it's right into the lows of this same trading range here. So you had to be a little careful of it. I think you were better off to wait and let it break higher and turn down. But I still didn't really like it that much. Looking back at it after the fact, I think you could have gone short there, and I think it could be red. So I'm going to go back and mark it. But at the time I was watching that one in real time, I wasn't quite sure about that one. But notice you did get a close outside right here. You really had a close outside here at a new high, and then you got another one here and still got a new high. So I think you had what you needed, but this is just so congested. I was a little bit worried of it. I was afraid you would push lower and pull back again to test this and then go down. That's why I really didn't like it. But again, looking back on it, probably was a pretty good setup. It's always so easy to look at it after the fact and say, hey, you know, you should have taken a chance here. But when you're looking at that in real time to the far right hand side of your chart, you see what I'm talking about. A lot of times it'll break lower and pull back again, and it might tick one tick higher and then go lower. So I like to wait on that third attempt, and you don't get it till here, and it's right off that trend line that confirms that trend line. You get another bearish bar, and you're looking for it to come back down to at least here, maybe down to here, and maybe make a new low. So I'm okay with that one because that's your trap. And then look what happens. You get the break, you get a move to a new low, it reverses. Not a good enough signal bar, still below the EMA, but look what happens. It pushes in, pushes above it, pulls back. And this is really like a double bottom here. And even though this one a tick lower, you could treat this like a first entry, second entry, because you did push through the EMA, you did pull back and test it, and it went lower here and then went out the upper side. So I like going long right there. And then letting it come back and adding another set there. Your runners probably would have got stopped here if you're doing the break even plus one. But here you would have got a runners again, and they wouldn't have gotten stopped out. So this would have been a nice setup. And then this is almost a repeat of the last one coming up. And again, I would be looking for a measured move. Here's your first leg. Be on the lookout from here to the next high, and you can see that's basically a perfect measured move. And so that could have kept you in this runner all the way up to right in that area. When we started going sideways, I would have exited. And then this is very similar to that pattern yesterday. Look, we push down, we get a first entry, we pull back, we get a second entry. This one really doesn't fail, but since you've got everything you need to be it's a failed second entry long, and you can still treat it that way. There's actually a little short-term trend line working right through here. That's the first break, so we're going to push down here and probably test this low again. So I like that one for the failed second entry long, the fact that we're going to test the low. Even though it's not a super bearish bar, it's relatively bearish because it closes almost on this low. And look at that big nice move. And then notice you got two legs down, and you've had a break and a new low. It's possible that you've got another trend line here, but you can't really make it fit really well. I guess you know, it kind of fits there, but you don't really get enough information for that. So the fact that it's so far away from the EMA and you got this reversal type bar bullish, we're probably going to snap back, and plus we should come back to test that breakout area at the very least. And so you're looking for it to maybe snap back. So if you want to be a little aggressive, that's one I like taking. But notice this trend line working up, then you get a break, first entry, pull back, second entry. So there's second entry long there. You are looking for it to come back. It was tempting to want to go short there, but it's right into that support resistance area. You've actually got to go back through the resistance here, but that's what you're expecting it to do, is retest this high. So I like it. And then again, look for a measured move. And there you see we got almost a perfect measured move. And then now you can kind of see this going sideways, and this is like a little failed break higher right here, but you've also got two legs up, and then even from here, this is a lower swing really than right here. So first entry, second entry, it's a second entry short, it's a failed break higher, it's a big bearish bar, you got plenty of room back to the EMA, even if it's only going to be a pullback. And another nice move, and that got you into the 2 o'clock hour. So, but another trader sent me an email today, and let me just see if I can find it. Well, I might have deleted it. No, I still got it here. He basically, he was trading today, and it just sounds like he's getting whipsawed to death. He says, entered a trade using a fade, placing an 8 tick. He actually says 8 point, but I think he means 8 tick. I hope he means 8 tick stop. In 7 seconds, I was taken out, and the price reversed right after that, going in the direction I was seeing it move. So I got in the next one, and I put in my 8 tick stop in, and when I got filled, it immediately changed direction. So I thought it would change my stop to 16 ticks as an experiment. It went right to my stop, then immediately changed direction. I was wondering what was going on. Why is it following my entries? Then I did another one, this time following the trend. Got filled, didn't put stop in, and took out a profit of 8 ticks. So I'm wondering if they are targeting my stops. You hear me say it a lot. This market is super efficient. It always pulls back and retests areas, and they know where the stops are. So when you enter, this is your signal bar, your stop has to go here. You can't enter here and let it come up and then move your stop up. They're going to come back and get those stops. And you see, that's really what this move back is. They were trying to come back and get these stops. This entry right here, that's what this pullback is. They're coming back to get those stops. And this is just a choppy day all the way across. If you don't know what's going on here, and you don't recognize that this is a trading range, and that you only want to enter off the extremes on each side. Look, if you'd entered off the extreme once. This is late in the day, so I didn't mark it. But it's obvious by here, this is a trading range. There's one, two, maybe 3, 4, 5 trades right there just in the last hour or so that are simple. But if you don't understand what's going on, you go short here and you go long here, you go short here, you go long here, and you get chopped to pieces. You got to understand that when you got a trading range, you only go short up here and you only go long down here. And that's the mistake people make. And that may not be where he got chopped up, but that's basically what happens to people. And if you're not putting your stop in the right place, if you enter here, your stop has to go here. If you enter right here, your stop has to go here, because look what happened. It pulls back, but notice how it never gets that stop. Same thing right here. Actually, it may have went a tick higher right there, but that's why you put your stop up here, because, and sometimes it'll go that one tick like that, but you should have already been out of that one if you entered there. Just find some more. If you go long right here, if that's your signal bar, your stop has to go below that. If you go short right here, your safety stop has to go above that, because otherwise, if you try to put it anywhere else, let's say you go short right here and you try to move your stop and close it down, they come back and get it. Same thing right here. If your stop's not below that, they come back and get it. And so that's just the way this market is so efficient. They know where weak traders and scared traders put their stops, and they always come back to retest those areas and double probe them. And so your stop has to go in the right place. That's one key piece. The other key piece is that you got to know what's going. You got to be able to read this chart and know what's going on. You got to know that once you start going higher here, you can't go short again. Not until you get something confirmed in the other way, or you get that trap, and that's right here on this one, and it works. And then once you get your break here to new low, and this starts going up, well, you can't go short again until you get a break and a retest to the high. And that doesn't come till up in here. You might have considered going short here, but I don't even think I would have gone short. It would have worked, just barely, but you still would have been able to scalp out. But the better one was waiting on it to get up here. And so I hope that's helpful. But that's what's going on. It's what it sounds like to me. But just after reading that email, I saved another one that I wanted to read. Let me find this one. Here's one that I wanted to read. Got this one yesterday, actually. It says, "Hi, Mack. I just had my first day with profits of over $1,000 using Pats today. Made $1,600 to be exact, about 55% profitability, so still room for improvement." So he made $1,600 a day, and he was only 55%. I'm assuming he means he got 55% of them right. The other 45 were losers. He says, "I was using 2 lots, first one scalp of 8 ticks or 1 runner always, and the second 1 R always and second's runner." I don't quite understand what he's saying there. I think he's scalping out and then saving a runner. 1 runner always, I think, is what he means, and the second as a runner. So I think he's just saying I'm always keeping at least 1 runner. Caught the run up early in the day to test the 1900 highs, then sat out the midday chop and FOMC news release, and caught my runners on a couple of entries coming back down after the FOMC was out of the box. I've been practicing using your videos first by going through my prior, and this is key right here, listen to this. I've been practicing using your videos daily, first by going through my prior day's trades and noting what I did well and where I could improve. Then I trade the prior day again on sim, 4 to 8 times speed, trying to take the ideal trades in hindsight, solidifying my mental images where the channels and ideal trade locations are. I also do this with older videos for additional practice. So, I mean, here's a guy I hear people say, "I can never catch a runner." How do you get runners? Well, here's a guy, he's getting his runners. And he's not even that profitable. He's only getting it right 55% of the time, and he still made $1,600 yesterday. But that's what I try to tell people. The runners change the math exponentially. And you don't have to get but 1 or 2. You got to get what you can get out of those 1 or 2, but it only takes 1 or 2. And if you can get your win percent up to 70 or 80% or better, which can be done with time, think what you can do then. So this is just a small sample. So this can be done, and he may not be profitable every day. I don't know. He just says his first day that he made over $1,000. He doesn't say how profitable he is all the time. So just keep that in mind, that this can be done. And if you're not doing it, then you're missing something. You're reading the charts wrong. You're entering in the wrong place. You're doing something wrong, because the price action is never wrong. It'll trick you occasionally, but it's never wrong. And that's something that I evolved with over time. And in my early years, I used to think that I would make a mistake, and I'd beat myself up trying to figure out, what did I miss? But that's also what made me better, because I kept going back and trading, studying the chart till I figured out, I saw something. There's always something there. So keep that in mind. I know without a doubt the price action is never wrong. It tricks us sometimes. It fools us. But it's never wrong. It's always here, and if you study it hard enough, and that goes back to what the other trader, the first email I read, I asked him, I said, are you sure, it takes a long time to get this? He said, well, I've been trading a long time, so I already know a lot about this. But I want to say he said something about, he says, "I did make a couple of bad trades, I admit that, but the ones I mentioned to you are good trades. I'm trading live, as this never happens on sim trading." So that was the point I was trying to make. You trade different, psychologically it will cause you to trade differently live, because you got real money on the line, where when you're not trading with real money, you know the rules and you follow them, and it works. So we know this works. So the problem that when it doesn't work, it's something mentally that you're missing. And, maybe it's the fact that you're using your real money. I don't, excuse me, there's different reasons, but it's a mental aspect, and you got to learn to deal with that. And if you're not there yet, if you start making a lot of mistakes, go back to sim. Don't keep beating the dead horse and giving your money back trading live. You're not ready yet. You may be able to do it on sim, but until you can double or triple on account and consistently win every day, you're probably not ready. And I know that's not what people want to hear, and but I'm just telling you what you got to understand. And this is not that hard once you get it, but it's not easy getting it. It's next to impossible for most people because they won't put in the time. They want to go live so quick and so soon, and they think they know what they're doing, and they go live and they still make mistakes. So again, you're going to make mistakes when you go live, but you shouldn't make so many that you can't still make money. If you make so many that you're losing money, like the trader today, maybe he just had a bad day. I don't know. He should have just got up and walked away or went to sim and said, forget it. I'm not having a good day. Don't keep, because the more mistakes you make, the more it breaks your confidence and the more mistakes you're going to make. If you start off on a bad note, your whole day is probably going to be bad. So if you have a couple of bad trades in a row, get up and walk away for 15, 20 minutes. Go take a coffee break, soft drink break, whatever your vice is, go do it. Wait 15 or 20 minutes and come back. You'd be surprised how suddenly clear it is, and you'll look at it and you'll say, what an idiot I was. How did I miss that? How did I not see that? But that's just the way it goes. But you'd be surprised what clearing your mind and taking a break and coming back will do for you. Either that or just close it down or go to sim and relax, and that way it doesn't matter anymore. But don't keep beating a dead horse, because you will have those days. And until you've had a long stretch of no losers, you're still going to have those days from time to time. I'd have them. It's been a while since I've had those kind of days, but I've had them. And, even after I got profitable, I would still have a bad day. And I'm not immune to that now, although it doesn't happen nearly as much. It's very rare now. So it's not you. It's just trading. That's the way trading. This is not easy. So anyway, this is almost a 40-minute video. I apologize. I'm going to wrap it up. I'm going to again, probably no video tomorrow. Probably Monday before we'll be back again to do it again. So, but I'm going to wrap it up for today. It's been a long video already, and so I'm going to close this one up. But this is Mack with PriceActionTradingSystem.com, and we'll see you next time.